This has lost almost 10,000% of its value against this since 1913. This is a fiat currency. This is money. This is printed. This is mine. This is highly manipulated. This sets the manipulation straight. A version of this has been tried thousands of times with a 0% success rate. This has never failed. Now, let's talk about all these comparisons I just did and dive a little deeper. Let's first just bring to light how the dollar lost almost 10,000% of its value against gold since 1913. By the way, the reason I chose 1913 is because that is when the Federal Reserve was established, and they have a significant effect on the decreasing value of the dollar. The dollar losing almost 10,000% of its value against gold since 1913 may be hard to comprehend for some people, so I want to give you a clear picture. If your great-grandmother stored $1,000 cash in a box in 1913, today you would have $1,000 cash. If your great-grandmother used that $1,000 to buy gold and then stored that gold in a box today, you would have over 48 ounces of gold, or a dollar value of around $96,000. So tell me, would you have rather your grandmother stored the dollar for you or gold? I think the answer is pretty obvious considering the massive inflation that's happened over the last 110 years. Some of you may be thinking, well, maybe gold just had a lucky run. Nope. I mentioned that the dollar is a fiat currency that is printed and highly manipulated, whereas gold is actual money that is mined and sets manipulation straight. To understand this a little better, we need to talk a little bit about history. A history that is 100% in the favor of gold over fiat currency. And this is based off facts, not some conspiracy theory. I think a lot of the time, precious metals advocates are looked at as almost conspiracy theorists or kooky, so to speak, and that's because that's the narrative that's pushed out by very powerful people who control the banks and who are the ones who are profiting from this narrative. Precious metals have been used for almost 5,000 years now. They weren't officially money until around 630 to 680 BC in Lydia, where gold and silver coins were actually weighed. Then it exploded in Athens. They were the first society to have a working tax system and free markets. This was all built off real money, or gold and silver. What happened next is something that is repeated time and time again in history. By the way, it's repeating again right now, but I'll talk about that in just a little bit. I'll give specific examples, but this is the stages that empires go through. First is that a country starts out with good money, which is either gold or silver, or something backed by gold and silver, as was the case in Athens. The second is that the economy and country develops, it takes on more economic burdens. The third is a part of these economic burdens includes social programs, welfare, although actually welfare wasn't around yet in Athens, that came in the Roman times. And then the biggest one, of course, is military. You have to protect what you're building, of course. The fourth stage is that eventually a war happens and the military is put to use, and this is where expenses go through the roof. The fifth stage is to fund the war. The country will start to steal the wealth of its people by debasing their coinage with base metals or replacing their money with currency that can be created in unlimited quantities. I'll explain more on this in just a little bit. The sixth stage is the loss of purchasing power of the expanded currency supply is sensed by the population in the financial markets, triggering a loss of faith in the currency. The seventh and last stage is a mass movement out of the currency into precious metals and other tangible assets typically occurs. The currency collapses and gold and silver rise in price as they account for a huge quantity of currency that was created. That is the process that has happened over and over again in history. I'm going to give you just a couple examples in history and keep them short, but this is something everyone should be studying. Athens, as I mentioned, was the first society to have a working tax system and free markets. They were prospering. Woohoo! Then, something called the Peloponnesian War happened. Athens had sound money. Their economy and country grew. They built a military. Then, they put this to use. And this is where things always go downhill. They started to debase their currency to pay for the war. What do I mean by this? Well, if you take 100 coins that are 100% gold, you melt them down and add 50% of worthless base metals, you get twice the coins. If you melt that down, where it's just 10% gold, you get 10 times the coins. Eventually, you get to a point where the coins are all base metals with no real value. Does this sound a little familiar? Hint, hint. Our coins today are 100% base metals, and they didn't used to be. Long story short, the remaining steps played out, and the Athenian Empire fell. Now, let's move to Rome. Rome started out as a republic. In the early economy in 500 BC, or for the first 178 years or so, they were using gold and silver mostly as their currency, with small denominations made out of copper and bronze. So They had a sound economy during this time. Then, Hannibal of Carthage started to harass Rome in something called the Second Punic War. War again. To pay for this war, they did deficit spending by taking the coins they got through taxes, they melted them down, added cheap and abundant base metals like copper to them so they could mint more coins. This caused big inflation. And this was one of the major factors that brought the Roman Republic down to a dictatorship, the Roman Empire. Side note, in addition to melting down their coins and adding cheap base metals, they also did something called coin clipping. They would essentially clip off a little piece of a coin, add a bunch of clippings together, and then melt them down. Today's society is doing something very similar. When you go to the supermarket, have you noticed that the portions have shrunk over the years? May not specifically be coin clipping, so to speak, but in essence, we're doing the same thing today with coin clipping with a little more stealthy approach. As far as currency debasement in general, we're doing the exact same thing. Let's go back to Rome. Now, the Western Roman Empire fell around 476 AD, but the Eastern Roman Empire continued to prosper for another 1,000 years or so. Why was this? You want to guess? Well, the Eastern Roman Empire, today known as the Byzantine Empire, based their monetary system off a coin called the solidus, weighing 4.5 grams and was made of pure gold. They had learned from their own history, and they made conscious choices to avoid currency debasement. They defended the purity of the solidus for a further 600 years. That was until 1034, when the same story started again. The debasement of the solidus was gradual at first, but soon accelerated and the coin was eliminated less than 60 years later in 1092. A new gold coin called the hyperpyron was issued in place of the solidus, and its purity was maintained at 85% gold until early 1200s, when it too was debased. By the 1350s, it had no gold content at all, and it served merely as a unit of account. The empire fell around 1453. The United States, as many countries before them, directly tied their money to gold up until about August 15, 1971, when President Nixon ended the Bretton Woods system. There's a lot of history I could talk about before this, but the big thing to note is that the Korean War and the Vietnam War happened in the years leading up to when the US dollar was taking off the gold standard. When Nixon ended the gold standard in 1971, the whole world went to a fiat currency on a dollar standard. With no gold standard and nothing having to back the dollar, it makes it very easy to just keep printing dollars. We are in the deepest stages of currency debasement, and we are deep. So, what's my point? Well, when a currency gets debased and inflation goes through the roof, gold is the equalizer, and history shows us this. As an example, in 301 AD, the price of gold was about 50,000 denarii per pound. Because of the currency debasement, there was a major hyperinflation, and just 50 years later, the price of gold was 1.2 billion denarii per pound. That's a 42,000% increase. Thousands of fiat currencies have been tried. 0 have ever succeeded. That's a 0% success rate. Gold, on the other hand, has a 100% success rate in history. You think that we're any different? Well, I'll tell you what's different. This time it's on a worldwide scale. It's not just one empire, it's the whole world that's in the last stages of a major currency debasement. Because this is the first time in history that the whole world is using fiat currency. And it's being printed and devalued at an exponential rate. You want to compare the dollar versus the gold? There is no comparison. It's just a matter of time before gold comes in and acts as the equalizer once again.